I've watched Ocean County sellers walk into a closing expecting one number and walk out with $14,000 less than they planned for. Every single one of them made the same mistake. They treated their home equity like a savings account that only goes up instead of a business asset that needs an exit strategy. If you don't time your downsizing exit correctly, the market is actively shrinking your net proceeds every single month you wait. So let's get into it. Most homeowners wait for the perfect moment to sell. But here in Ocean County, waiting for the perfect market is a losing battle. You need an equity audit. We're not talking about your Zillow estimate. We're talking about the realized equity after taxes, broker fees, and closing costs. This is the fuel for your next move. Here's where it gets interesting. Let's look at the numbers. Imagine you sell for $600,000. Sounds great, right? But after we factor in your state withholding, closing costs, and the specific property tax scenarios in towns like Toms River or Seaside Heights, that $600,000 number drops. Let that sink in for a second. Understanding the difference between your gross sales price and your net proceeds is the only way to avoid the trap. I mentioned in the hook to see why this playbook is the difference between a stressful transition and a smooth one. Let's look at two hypothetical paths. Path A, the wait and see approach. Imagine a homeowner who decides to wait because the market might change. They skip the equity audit. They don't run the net proceeds calculation. They wait 2 years only to find out that rising taxes and shifts in the local market have eroded their purchasing power. They end up settling for a home that doesn't fit their needs, just to escape the current property tax burden. Path B, the playbook approach. Now, imagine a homeowner who runs these exact numbers 6 months out. They identify the fuel they have from their home sale. They use that number to identify a specific community where the purchase price puts them in a mortgage-free position. They aren't hoping for a change in the market. They are banking on the reality of their own balance sheet. The difference between path A and path B isn't luck. It's the strategy we just walked through. Once we know your net proceeds, we match that to your lifestyle goals. Does a $400,000 home in a 55 plus community give you the liquidity that you need for retirement? This is a planning conversation you want to have 6 months before you list, not 6 minutes before you sign. Ready to see exactly what this looks like for your home? I've put together a custom equity roadmap. It's not a canned report. It's a realistic professional look at your net proceeds after exit taxes and moving costs. Grab that link directly in the video description right now to start the conversation. Awesome. If this video helped you, hit subscribe and tap the bell. I cover Toms River and Seaside Heights real estate every week for homeowners just like you. I'm Joseph E. Haberl with Our Show Real Estate right here in Toms River. Confidence in your move, certainty in your retirement. I'll see you on the next one.